Argentina's country risk hit a 7-year low this week, fueling expectations of a return to international debt markets, but a decision to award a major pipeline contract to a cheaper foreign supplier over local giant Techint divided government and industry. Here's your Argentina brief for this weekend. So, Argentina's risk spread drops below 500 basis points, the lowest level since June 2018. To put that in perspective, Milei inherited nearly 2,000 basis points when he took office, and it's worth remembering that under Alberto Fernandez it topped 4,000. So what's fueling the optimism? Well, Ecuador returned to global debt markets for the first time since 2019, placing $4 billion at rates well below expectations. This is a very relevant comparison given both countries' history with sovereign debt defaults, which is leading analysts to estimate that Argentina's return to markets could happen at similar yields this year. On top of that, Barclays recommended the 2038 global bond from Argentina, citing reserve accumulation so far this year, a trade surplus that's running at about $18 billion annualized, and a record energy surplus in 2025. And JP Morgan and Bank of America issued notes in a similar vein, both seeing room for further yield compression in the following weeks. And Argentine provinces aren't waiting around either. Córdoba placed $800 million at 8.6%, an improvement from the 9.7% last June. Also worth noting that Entre Rios met with BlackRock and PIMCO this week as it seeks to set up its own issuance. As for the sovereign, well, sources told Bloomberg Linea that there were no imminent plans to tap international markets for now. Time will tell. India's Welspun won a major Vaca Muerta pipeline contract over Techint's Tenaris. Deregulation Minister Federico Sturzenegger, Welspun's bid came in around 40% lower. The chainsaw minister came out swinging in defense of the Indian company. In his words, more expensive pipes mean fewer jobs and less investment. And he also addressed reports that Techint allegedly offered to match Welspun's price after the bids had been opened and accepted. Sturzenegger said that accepting such a move would have undermined future competition in Argentina. This public confrontation, which Milei took part in directly via X, raised some concerns among local industry groups who are now concerned they won't be able to compete with such foreign players at these prices. It should be said that the RIGI investment scheme to which Southern Energy has adhered does allow companies to import from cheaper suppliers. The question on everyone's mind, is this the path to competitiveness for Vaca Muerta? But also, how will this impact manufacturing and jobs in Argentina? Now, speaking of Vaca Muerta, it kept breaking records in 2025. December output hit 879,000 barrels per day, an all-time high according to official data. And get this, 2/3 of that came from shale. Also speaking of the Techint group, Tech Petrol announced it was launching a major drilling campaign at Los Toldos Este 2, targeting 70,000 barrels per day within 16 months. The government expects that Argentina could reach 1 million barrels of oil per day in 2030. While these records are being broken, Reuters reported that Shell was quietly sounding out buyers for its Vaca Muerta assets. The British major has been in Argentina since 1914, and it was one of the first to bet on shale here. No final decision has been made, according to that Reuters article. The timing is hard to ignore, considering that companies like Continental Resources from Harold Hamm recently bought stakes in 4 blocks and called Vaca Muerta one of the most attractive formations in the world. Shifting gears, Milei's alignment with Washington continued to reshape Argentina's foreign policy and also its financing options. Case in point, a China-backed lender canceled a $65 million loan for a wind farm in Tierra del Fuego. Why? Buenos Aires had declined to provide the sovereign guarantee, according to sources familiar with this matter. This is certainly consistent with a government distancing itself from Beijing. Trade is seemingly fine, but apparently not taking on new Chinese debt. Foreign Minister Kirno urged Argentines not to travel to Cuba. According to Bloomberg News, the island has less than 3 weeks of fuel left, and Trump has threatened tariffs on any country that supplies it, while Argentina is squarely aligned, as we mentioned, with Washington. And one more development. The New York Times reported Argentina is in talks to receive deportees from the US. It's unclear what would happen to those deportees were they to arrive in Argentina, but no deal has been finalized as of yet. And finally, the Argentine peso. After years of wild instability, carry trade interest has made a comeback. Money market funds in pesos rose 7% in January alone, according to consultancy 1816. As Bloomberg News reported, peso rates climbed to about 38%, which is a 3-month high. And the key part is that the currency traded in a tight range for 4 straight months. Many investors seem interested in riding this out through the mid-year soy harvest when dollars typically flood the Argentine market. Private estimates suggest that January inflation could come somewhere between 2.3 and 2.6%, down from December's 2.8. It's also worth noting that the Treasury absorbed 2 trillion pesos from the system at an auction this week. Analysts aren't expecting a big impact on rates, but the consensus is clear. The era of ultra-cheap funding is over for now. So to wrap it all up, country risk at 7-year lows, record oil output, renewed carry trade interest, and geopolitical alignment with Washington deepening. But at the same time, industrial concerns mounting. That's your Argentina brief for the week. If you give this post a retweet or share it via WhatsApp, I'd be hugely grateful. Have a great week.